Our next panel is cryptocurrency. The cryptocurrency market continues to push further into the mainstream with massive investment from the world's biggest financial players, surging popularity of NFTs, and the increased rollout of new crypto-linked products from traditional and decentralized finance firms alike. Policymakers, though, are increasingly stepping up their oversight of digital assets with the Biden administration's executive order, the latest and most high-profile announcement to date. Our panelists will explore how the evolving regulatory landscape is affecting institutional investors and the broader financial ecosystem's decisions to invest in this space. I'd like to invite out our moderator. We have Brett Philbin, Executive Vice President of Edelman, and the panelists, y'all can come out. Our panelists include Carlos Domingo, co-founder and CEO of Securitize, Ari Paul, founder and CIO of BlockTower, Jake Brukhman, founder and CEO of CoinFund, and Marco Santori, Chief Legal Officer of Kraken. I'll let you all take it away.
Thank you, Julia. I'm Brett Philbin, Executive Vice President at Edelman. I'd like to introduce our panelists right now. Marco Santori, Chief Legal Officer at Kraken, one of the world's largest digital asset exchanges. Jake Brukhman, CEO and founder of CoinFund, blockchain-focused investment firm. Ari Paul, CIO and co-founder of BlockTower Capital. And Carlos Domingo, CEO and founder of Securitize, a digital asset securities firm. Thank you all. I want to start with the Biden executive order, which was announced last week to much fanfare. There was obviously a lot of enthusiasm about the order. A lot of people were very excited about it, but a lot of thoughts that there was no concrete action or definitive policy action there. Marco, I want to ask you what your thoughts were, what this means for the space, as well as institutional investors in general.
Yep, absolutely happy to share it. And first of all, thank you to the forum for having me. I'm the Chief Legal Officer at Kraken, which you can see at kraken.com. It's one of the largest exchanges in the world. And we've been doing policy, and certainly I've been doing policy in crypto since the beginning, since before there was crypto policy. And I think that looking at the executive order and viewing it as a really good thing, which a lot of commentators have, really shows off your inexperience in the space. And I think that looking at the executive order and viewing it as a really bad thing also shows off your inexperience in the space. Just like you guys are investors, I'm a lawyer, but you guys are mostly investors. You have the concept of being priced in. Something is priced in, news is priced into the market. This executive order was priced in, and it was priced in years ago in the minds of policymakers, in the minds of policy professionals. There is no world in which this executive order would not have happened. Think about that. Think about that and what it would mean for someone who does policy every day, like you guys look at markets every day. This is like you got mostly a nothing burger reaction from policymakers, and I think that's good, right? If we would have gotten a reaction in any other way, we know something was amiss. Either we have massively mishandled an enormous regulatory and policy advantage over the last few years because this executive order was so positive, or we completely missed this massive landmine because this executive order was so negative. So when you hear commentators talk about the executive order, really what you should hope to be hearing is the commentators saying, look, this is what's going to happen because of the executive order. Forget whether it's good or bad. This is a chaotic churn of myriad factors. What is going to happen is the same thing that happens after every executive order like this. There will be studies. Those studies will identify risks, and those risks will be filled by new rules, by new regulation. That's what governments do. They abhor vacuums. They abhor market gaps, and these studies will output identified risks, and those will be filled. And it's happening relatively early on in the Biden administration, early enough that there will be gaps filled, and that's what we have to expect once the first reports start coming in 6 months.
So it sounds like there's not a lot of clarity right now, but what I'm curious about is, could the order be a potential catalyst for institutional investors or others looking to get in the marketplace? Ari, what do you think?
I don't think a major catalyst. I think in the West, the executive order was basically what was expected. Maybe we got a small positive market reaction, I think, because there was in people's heads a left tail, like a small probability of more onerous language. Asian traders were a little more pleasantly surprised, which frankly I was surprised at their surprise because I didn't view the executive. I agree with everything Marco said. So in the longest time frame, it's always been inevitable that as crypto grows, it attracts the attention of different levels of regulators. Whether it was, in 2013 was the FBI, because crypto was really the only regulator to whom it mattered. Or the only institutional body to whom it mattered was law enforcement around things like drug purchases on darknet markets. And then we had the ICO craze in 2017, and now crypto's big enough to matter to the SEC because ICOs actually surpassed all non-ICO VC fundraising over a period of 2 quarters. And now we're finally getting to the level where crypto's big enough to matter to Treasury departments. And we're kind of on the edge of that. In 2017, the Treasury Department testifying before Congress, I was a member of the Federal Reserve, actually said, no, it's not impacting U.S. monetary policy or any metrics we look at for the U.S. economy yet. And their implication was another 5x, 10x, and it probably would. So I totally agree. It's always been inevitable this would attract greater attention. In a shorter term sense, it was maybe a slight positive surprise just in that it could have been worse. We could have seen more aggressive, not necessarily action, but more aggressive language coming out of the Biden administration. So I'd say from my vantage point as an investor, I'm not a lawyer, I'm not a legal expert, there's very much a path-dependent element here around personalities. Elizabeth Warren has been banging the drum, calling for more crypto regulation. Very easy to imagine that this is very political, separate from turf building and kingdom building of regulators like head of the SEC or CFTC. You also have individual political careers and thinking about kind of the political landscape in that. Hard to imagine a more popular populist whipping boy than the crypto nouveau riche, and hard to imagine a more attractive target potentially for those on the left. So hard to anticipate how this plays out. I think there's a path dependency here. For example, if mainstream media were to connect Russia evading sanctions with crypto, that then empowers politicians to then use that for political points. So all in all, I viewed it as a nothing burger. The market, there was a very small rally off it, but unless you're a short-term trader, it was just noise. You wouldn't see it on a chart, only relevant to short-term traders. And I'd say I'm expecting substantially more enforcement of existing regulation over the next 12 to 18 months. The crypto industry has basically evolved with almost no regulatory enforcement. There are headlines, so basically any major player, any substantive company or firm or individual in the crypto ecosystem has never gotten more than a slap on the wrist. So small fines, exchanges like, I won't pick out individual parties, but you now have exchanges getting SPAC'd, becoming publicly listed that their founders could be behind bars. They committed pretty obvious kind of criminal felonies, but the enforcement has been more minor fines. Hey, you just raised $1 billion through an illegal security offering, we're gonna fine you $20 million. Basically almost a reward. So I think that's gonna change, and that will shape the industry quite meaningfully, and I'll stop monologuing at this point, but that's a whole can of worms.
Well, we're crystallizing around the phrase nothing burger, it sounds like. But I guess what I am wondering, Carlos, we were talking upstairs, if there's nothing burger right now, what kind of clarity are people looking for digital asset ecosystem? Like, what do they want to hear that would give them either the comfort to invest or the knowledge that, hey, this is a more harsh framework that's coming to bear?
So I think there's, as Ari said, there's a lot of clarity already on certain things that just people ignore them because they're not being enforced. Recently one of the biggest fines, if not the biggest one in the industry, which was the BlockFi, $100 million fine. Their narrative was that this brought regulatory clarity, and I was thinking, like, what regulatory clarity? Everybody knew that this was securities, and a publicly traded company like Coinbase was explicitly told not to launch this product because it's a security unless you're planning on launching it as a security or you get a banking license. So I think that what investors look is for clarity, but as well as for enforcement, right? Because otherwise it creates this regulatory arbitrage where people are doing things outside existing regulations. And then there's certain areas where existing regulations maybe don't fit particularly well because they are not designed for certain things like, I don't know, like stable coins maybe, or things like that where more regulatory clarity is required. But there's many other areas in crypto where clarity is there. It's just because it's not being enforced or the fines are very small, then nobody actually cares about it, and that scares off the investors that these people doing things that are potentially illegal. And then I think a third area that could be potentially of interest to people, but that again, where regulatory clarity is non-existent, risks are potentially high, is DeFi. Because on DeFi, you actually don't know who you're trading against, and while this is very, from the ethos perspective of, wow, this is decentralized, permissionless, anonymous, etc., is very good, but from an institutional perspective, the fact that you might be lending money to somebody in North Korea or now in Russia, it's a huge risk, right? And those technologies and those protocols are very valuable, but without a little bit more enforcement of KYC, AML, and some types of monitoring, that institutions will not adopt it.
You mentioned earlier, Ari, about the sanctions and the notion that crypto is playing a role in the conflict, unfortunately, and there's also the humanitarian side. I'm curious, Jake, your perspective on how those external events are affecting global adoption, with obviously regulation as a component of that.
Thanks, Brett. It's a good question. Well, I think our base case is that things like COVID, things like wars, they tend to accelerate the adoption of certain technologies that are relevant. I mean, what can we point to around Ukraine? Ukraine has definitely brought up a couple of donation addresses in crypto and was able to collect, my team tells me, about $60 million worth of donations very quickly and across borders, for their effort. It's conceivable that there's a number of ways that people have been able to, conserve a degree of their wealth, like at a time when maybe their banking infrastructure isn't operating or isn't online, right? I'll tell you what crypto hasn't been used for, and that is for avoiding sanctions. I think using something like Bitcoin would be a terrible idea to try to hide sanctions avoidance, because these types of blockchains have been shown to be pretty trackable, and also because of the size of the space, right? Like if you think about, I think the figure is something around $640 billion that have been frozen, in terms of Russian sanctions. I mean, this represents just a huge percentage of the whole space's market cap today. On that note, though, there's a certain pressure here in this global event to push governments and state actors toward central bank digital currencies, CBDCs. I think over time, those actors that have been affected by sanctions, are realizing it or already have realized that having a CBDC, can potentially lower the dependence on foreign currency, can turbocharge, kind of their national currency. And so CBDCs are a way that potentially these actors could avoid sanctions in the future.
So just to clarify, are you thinking that what we're seeing right now in the environment geopolitically, we'll see more in the way of CBDC, whether it's movement, to create them or to police them? Are you seeing more of that to come now, it sounds like?
Definitely, and I think as some of the folks here can tell you, like CBDCs have been a core focus, of regulatory sort of scrutiny in the U.S. so far, and we can point to things like, the Bitcoin Libra or Diem project not working out, right, for the reasons that governments are pretty uncomfortable with them running sort of a national stable coin. But I do think that there's a number of folks kind of number of countries looking into this area to see how it could benefit them.
Taking a step back, and I'll direct this to Marco, looking at the overall landscape, how would you characterize the regulatory dialogue right now between policymakers and the industry? Is there anything that can be done to enhance those conversations that we know are taking place very frequently?
There's still an enormous education gap that exists pretty much in every political center of the world that has looked at this issue, the issue of digital assets and blockchain technologies. That gap is probably widest among the policymakers and a little bit more narrow with the regulators. So here in DC, for example, you've still got congressmen standing up and waving their arms and pounding their feet. Pounding their fists and stomping their feet that we gotta crack down on Bitcoin for sanctions evasion. Not really knowing what that would mean. Not really understanding what cracking down on Bitcoin for sanctions evasion mean. They don't have any real evidence that Bitcoin is being used for sanctions evasion, for example. Instead, you've got regulators responding to that, like we've seen come out of the U.S. Treasury saying, look, digital assets are subject to the same controls as government currencies. You have to comply with the laws. And then you've got everybody in the industry saying, well, we are complying. We're doing precisely what we're supposed to do, at least among the US-based platforms like the large exchanges like Kraken. We are following the law. If the law changes, we will follow that. We will follow that new changed law. In terms of our perspective as a participant and our perspective as industry members, well, I can tell you what I feel. I feel late to work. I feel like, despite having been in crypto policy for as long as I have been, the industry has never had the resources to engage in the way that it has now. The community has never had the voice that it's had until now. And I wish we would have recognized that. I wish we would have had that about a year ago. Jake and I were talking about this earlier, that I feel about 1 year behind, which, depending on your time scale, is not all that much. You're at a big bank, a year is a day. You're at a crypto company, a year is an eon. So I'll say that what we're seeing now in DC, in Brussels, and to a lesser extent London, is this accretion of resources and talent and money in the world of policy. You're seeing new Washington, D.C. offices open up dedicated to advocacy for particular companies, to particular technologies, particular segments of the industry. That's just started to happen, I'd say, right around the time of the infrastructure bill. And so those days of policymakers not really, I should say, let me back up. The days of policymakers being comfortable, not understanding what is going on in crypto, those days are numbered. Those days are numbered. And this is not just speculation. This isn't, blockchain fabulism. This is empirical. I mean, I was just in DC 2 weeks ago, and from a congressman, I heard for the first time ever, the phrase blockchain education fatigue. Think about that. Think about what that means. I mean, back in 2013, when all this stuff, this Web3 stuff, this DeFi, basically everything that wasn't Bitcoin, it didn't exist. We just called it Bitcoin 2.0. We knew it would one day, but we just called it Bitcoin 2.0. Can you imagine thinking back in those days that there would be an executive order on crypto and what it would say, that there would be blockchain fatigue among Congress and what it would, and how it would have gotten there? I'll tell you what, I told you that was priced in because it was. We knew it was coming. But man, I wish we would have gotten here a year sooner.
Just to follow up on that one, Jake, you mentioned talking to Marco about this. On the regulatory education point, where can we be a year from now, to Marco's point? We're a year later. Do you see us at a point, this order at some point will hopefully come out? Where can we hope to be as far as maybe it's having those policymakers even more in the weeds? Or what's your thoughts on kind of where we can go from here?
Well, I think to Marco's point, the process, the regulatory and also, to some extent, legislation process has started, and it's inflected quickly. So I would say maybe 6-8 months ago, if you ask a person who knew about Washington, they would say, oh, the senators, they have much bigger fish to fry than crypto. We'll see legislation someday, but it'll be 5 years from now, hell, maybe 10 years from now. And then, kind of 3 months into that, they're like, you know what? There was this infrastructure bill. It got held up in Congress because of a crypto provision, and suddenly everyone realized that there's a whole constituency here, and it's well-funded, and it's well-organized, and they have lobbying groups, and they have folks like Marco, talking to them about the industry and educating them. And that estimate of when we're going to get legislation went down to, I don't know, maybe 2 years. And then now that we're sitting here, there's something like 3 pieces of legislation, being sort of showcased, and 2 of them are pretty comprehensive and cover many, many of the issues in the space. And it's very early, and it's probably I don't know, what would you say, Marco, 12 to 18 months, maybe more lead time to actually getting some laws, right? But my early read of those things is that they're moderate, right? They'll say things like, hey, we shouldn't touch DeFi yet, it's too early, or they'll have propose a pretty liberal view on security classification as it comes to digital assets, or a new self-regulatory organization for digital assets. And my read is that a moderate kind of set of rules is bullish for the space, because the core thing that founders are looking for at the end of the day is clarity of how to go to market, what's allowed, what's not allowed. And the hope is that these rules are moderate enough that they also allow some of the more transformative and disruptive aspects of the technology to come to market and to be to make impact.
Ari, what are your thoughts on regulation going from here?
I'm more focused on the enforcement of existing regulation than new legislation. I have no idea what's going to come out as new legislation. Out of Europe, we'll almost certainly get continuation of the AML KYC travel rule kind of guidance they've been putting out, and that will probably get codified over the next 2 years and start getting enforced. But in the US, so here's a little bit of a contrarian opinion, or at least one that I don't think most people in crypto proactively agree with. And frankly, most just I don't think about it that much, including kind of insiders. The crypto industry to date has had such little regulatory enforcement that as investors, as traders, we almost disregard it as except for when there's a rumor or when there's a specific risk. So for example, people ask about Tether constantly, and I used to get asked about that as the most common question I would get from investors, potential investors: is this going to take down the entire industry? And at some point, people stop asking questions because you just kind of get complacent. And this is true in TradFi as well. There were probably more people asking if real estate was in a bubble in 2005 than in 2006. At some point, you just accept the world as it is, and you stop asking, are we in a bubble? Is this unsustainable? You just kind of say, I guess this is how the world works. So the world in crypto have kind of embraced this idea that regulation doesn't get seriously enforced except against the worst outright illegal scammers, the most egregious actors. I think that's going to change over the next 12 to 18, 24 months. Every data point from regulators suggests that. Well, we don't have a lot of data. What we have is what they're saying. Gensler's been saying this to many industries without taking much action. So who knows? I don't know what's in his head, and his team doesn't either. But I would expect that the existing financial regulation starts getting enforced. So what does that mean? US entities, most volume in crypto today are on illegal offshore exchanges. And they're illegal because they allow US customers despite not being CFTC registered. The CFTC hasn't really done anything about that, except for a few very rare exceptions where there's always something else going on. As a concrete prediction, and I don't have a crystal ball, but I would lay even money on this. I think within 18 months, entities like mine, which is an SEC-registered US-regulated asset manager, will be prohibited from trading on those offshore exchanges. I put it at 1 in 4 to 1/2 will be prohibited from trading on DEXs. DEXs are decentralized exchanges that today do not perform AML KYC. The DEXs themselves, it's hard to answer a question if they're legal or not because they're decentralized. And when executed properly, there literally is no team behind them. There's a lot of nuance there, but at least in steady state, like maybe the DEX was created illegally or launched illegally or fundraised for illegally, but once it exists, regulators can't really do anything about it. But they can prohibit regulated financial firms from transacting on there when on an exchange that's unregulated that does not have AMA KYC. So I think what that's going to do is kind of bifurcate the industry into the compliant and the non-compliant. And I don't think the non-compliant side goes away, but you'll have a much clearer bifurcation. Whereas today that really doesn't exist. So firms like mine are competing head-to-head against, someone who's just hoping to stay under the radar, and it barely enters our thinking, even on the investment side. So, for example, every day I see a deal that's backed by Sequoia, Benchmark, A16Z, the top VC firms in the world, that's explicitly an illegal business model. Like the core thrust of the business is a regulatory arbitrage that's not an arb. So they're basically saying we see a market opportunity that exists because no one will do it because it's illegal, and those companies are raising at 100 million plus valuations. In some cases, they then get SPAC'd and become publicly listed. So the investors haven't had to ask the question of, is this illegal? Because it hasn't mattered. Investors in the illegal crypto startups did incredibly well and had public market exits. So I think that's going to change, and the conclusion of all of that is I think it's basically going to create kind of a much clearer bifurcation and change the way people like us, at least, have to think about investing in the space and allocating and trading in it. And probably most of the people in this room will be affected if you're allocating or investing in crypto, since presumably many of you are regulated in some way.
I just want to add something to what Jake said, and then Ari. Jake said, "Oh, well, founders, the only thing they want is to know what they can do, what they cannot do." I know a lot of founders in crypto. What they do is what Ari described: is regulatory arbitrage. In other words, this is illegal, but because I'm small, I'm going to get big enough, and by the time I get big enough, I'll just pay a fine, and big fines traditionally have been small. At a point in time, they will tell me how to move into legality, or they'll just tolerate what I've done, and that's regulatory arbitrage, and a lot of people do that. And I also saw recently there was in the whole NFT space is this idea of the giving NFTs that you purchase a song and then you get the royalties. Those are securities. I mean, it's an investment contract, right? You're not purchasing anything. I don't know, Marco, you are the expert on those topics, but it seems to me those are investment contracts, and there's companies in the space that are trying to do it, issuing Reg Plus offerings for each NFT because it pays royalties, security, doing KYC, and there's other companies funded by large VCs, as Ari mentioned, that they've decided to do it just purely as an NFT, and obviously there's no KYC, there's no ML, there's less friction, so they're going to go get bigger faster, right? Because treating things as securities adds friction unavoidably, right? So I think unless, and I kind of share the view a little bit, especially on DeFi, that the DeFi is going to separate into more institutional regulated DeFi, or at least safer DeFi if you want, with KYC, ML, and things like that, and the pure DeFi that will continue happening as it is today, with no no controls over how who is interacting with the protocols, or how the funds are flowing, right? And I don't think if this will get the non-regulated one will be big enough, because it will always be the realm of retail primarily, or maybe offshore funds, while the other ones could potentially attract the money of the institutions and get much bigger. And then if it gets much bigger, it gets better liquidity. If it gets better liquidity, better returns, etc. So.
Taking a step back to investors for a second, we did a survey at Edelman that we released today, and what we found was over 1,000 retail investors that we polled, regardless of income level, regulation was paramount to their investing decisions, and nearly half of them felt the market needed additional regulation. So I'm just curious, maybe starting with you, Ari, what do you feel like are the factors that really impact institutional investors? Like, what are they looking to hear to get maybe more involved in the crypto ecosystem?
We probably need to parse that title, institutional investor. So right now, the bulk of money coming into crypto are actually institutional allocators. Retail is basically absent at the moment in terms of marginal inflows. The category that is keeping crypto afloat at the moment are institutional allocators who are primarily investing into funds. There is some direct buying by family offices, high net worth individuals, companies directly buying Bitcoin and Ethereum, but mostly it's flowing into regulated funds. So there is that institutional allocation happening. One key element is that intermediary makes them not afraid of any risk. So they're not writing a check to an illegal startup, they're writing a check to A16Z. And it doesn't, that regulatory intermediation really matters. Another angle of this is like we're exploring doing enterprise DeFi and private debt. Enterprise DeFi basically just means AML KYC DeFi, a compliant version, which almost doesn't exist yet. It's very nascent, it's just being built right now. And we've been talking to players like Cerberus and Blackstone and muni bond funds, and they're all super eager to get 1-2% yield enhancement out of DeFi. I think they're all at best 2 years away from doing anything directly, even if it was clearly legally and fully compliant, right? Just getting their lawyers on board, all of that. Whereas I think they'll be in the space within a year through intermediaries like us. And I'm not trying to talk about us or us, but the point is intermediaries like regulated institutions, regulated exchanges, regulated, kind of the white glove handholding where you're intermediating the expertise, the risk, but also the reputational risk, career risk, regulatory risk, all of that, whether that makes sense or not. Bitcoin has really never had regulatory ambiguity in ownership. I think often when people throw out the regulatory ambiguity line, it's a lack of understanding. What they're really saying more is our legal team has no idea what this is, and I don't know how they're going to get comfortable. It's almost like there isn't the hand-holding from regulators to clearly, easily delineate what is clearly legal and compliant and what isn't. There's plenty of gray area, there's plenty of black area, and there is good chunks of white area. And most of what institutions want to do in the space falls under the white area. So I think it's less about clear laws, and it's more about what I was talking about, enforcement. For example, if you're that institution and you're going to buy Bitcoin through an exchange, can they distinguish a Kraken with serious legal counsel and Marco's done everything in the industry, by the way. Legal counsel's an understatement. He's been a practitioner and everything. But basically savvy, serious, compliant exchange with other exchanges that claim to be the same, that look similar to an amateur, but maybe outright criminal enterprises. And I think that's a very legitimate point. If you're a pension, it's not easy to instantly differentiate a Kraken from kind of its imposters. And so how do we get clarity on that? The enforcement side, right? It's basically, as an institution today, you can't feel comfortable that just because something is a multi-billion-dollar exchange and even maybe is publicly listed, that it's not an outright criminal enterprise. So I think that bifurcation I talked about will help institutions get comfortable. Maybe not in real time, though. It's probably going to be scary while it happens, but coming out the other side, I think that's what really opened the doors, because it's somewhat similar to, like, as a consumer or an institution, you can kind of trust that if something is a US regulated bank, it's probably not a fly-by-night scam, right? The burden, the hurdles of being a bank in the US are so great that it really does a good job of mostly eliminating the fly-by-night scam. So if you walk into a bank and you can confirm they're FDIC insured, you can kind of assume you're safe, and that's a reasonable assumption. That assumption's not currently valid in crypto, and I think that assumption becoming valid removes a lot of the brain damage from trying to allocate to the space.
Jake, what do you think about that? Institutional investors, what factors are they looking for to get more comfortable?
Yeah, well, one thing to say, to Ari's point, is that if institutional investors are driving kind of the crypto space right now, that's wild. That's a huge milestone. I remember, when you were on the Bitcoin subreddit in, 2013, and some company in the middle of Idaho with 20 employees, so much as mentioned Bitcoin, everyone gets so excited. Bitcoin's going mainstream, right? 2 years ago, most institutional investors were not writing checks, right? The difference between the institutional market 2 years ago and now, is quite dramatic. And moreover, if you look at sort of the core areas of crypto, like DeFi, it's maybe it's a little bit different now, but for the last 3 years or so, most of the volume is coming from crypto enthusiasts, right? If you look at the NFT space, $50 billion yearly GMV rivaling global art sales, the vast majority of assets that are being traded are like crypto native collectibles, crypto native in-game assets, and who's trading them? Mostly enthusiasts. So that crypto is starting to become a venue for investment from institutions is just an incredible milestone for the space, and has come in about 10 years of work. And from our IR team, I can tell you that regulation is not really the thing that they ask about when they land in front of us. Regulation has been priced in. They'll talk about, are they too late to the space? They'll talk about why should they invest in a fund versus holding Bitcoin or Ether directly. they'll talk about education, they'll talk about different areas. But, I feel like a lot of institutions we talk to, they're starting to see this industry as kind of a second bet on the second internet. I think they see it as a long-term bet. I think they're starting out small, and over time they're going to, increase their position sizes. And they're very viscerally aware that they need regulatory clarity, but I think they've already made the call to bet that long-term will work out.
I think maybe regulation is not the right word, right? Maybe what they want is investor protection. So they want to know that if they're investing in something that is not a scam and that somebody has either forced them certain degree of disclosures or put them on certain regulations that you know where you're investing is legit, right? So I don't think that people need more regulation for buying Bitcoin, but there's many other stuff on the crypto space which is not Bitcoin, right? That people don't feel comfortable with. Like you invest on a token, and the token did an ICO. Was that an illegal sale of securities or not? Are they going to be shut down and then it's going to go down to zero? Or a DeFi protocol, how do you know if these guys are not creating liquidity pools with somebody in North Korea? So I have no idea. So that's what I think scares the investors, because there's been a lot of scams in the industry, and there's many still going on. and unless you're comfortable that you're not investing in something that somebody's doing something illegal or is a scam, then people won't put the money there, right? So, and I think that's what people refer to as regulation, right?
What are your thoughts there, Marco?
Yeah, that's actually really interesting. Is you draw an important distinction there between investor protection and regulation, right? Neither are subsets of the other or supersets. It's a Venn diagram that has some overlap. Investor protection can come in a lot of ways. For example, Kraken just published its first of its kind proof of reserves audit, where we engaged a third-party firm to prove cryptographically and to demonstrate cryptographically that every coin that we say, every Bitcoin, for example, we say that we have in your account that you see on your website can be checked. You can actually confirm that is, in fact, in our reserves. So that if we're going to go Gox, it's not happening tomorrow, right? That's something that we've done without any regulatory requirement to do so. So investor protection and consumer protection, depending on the asset. Not all these assets are securities and not all holders are investors. That can be done in a number of different ways, and a lot of them are ways that would appeal to your typical free market enthusiast who doesn't really feel like he or she gains anything from a regulatory requirement to do so. What they gain from is the exchange delivering on the protections that they want. And thankfully, there's not just one exchange out there. Crypto is an open system. It breeds competition. It permits different exchanges to experiment with solutions that people want. There are a lot of exchanges that have tried consumer protection and nobody cared, because the way that they went about it just wasn't demanded by the market, it turns out. And thank God we live in a capitalist system and we can try those things. So I agree, those two, consumer protection, investor protection, and regulations are not necessarily the same thing. I disagree with your study. I haven't heard anybody come to us. In fact, we don't have really anybody coming to us saying, why aren't you guys regulated more? Nobody does that. And I would also be surprised if the investors who you polled, who were clamoring for regulation or asking for regulation, would buy a coin as a result of more regulation. I think this is an example of asking the public what they want in a faster car and them responding a faster horse, because they don't know what a better car can bring. Butchered metaphors aside, I will say that in terms of the inflow of institutional interest into alternative assets beyond digital currencies today, it's really a fascinating phenomenon, this adoption of NFTs by large corporates. Nike is in the NFT game, Adidas is in the NFT game. Gosh, we've been seeing financial services companies get into the NFT game. Why? Because Bored Apes have intrinsic value? Yes or no? No. No, it's because they missed out on Bitcoin and Ether and all the rest, and they had to sit on the sidelines because there was no regulatory clarity. Big corporates can't move without regulatory clarity. So what they see in NFTs and a lot of new efforts today is all of the FOMO and none of the regulatory gray area because these things are just trading cards. Yeah, well, talk to me in a year or two. I think it'll be a different conversation then. And that shouldn't say that I don't think NFTs are important. I actually think NFTs are more important than Bitcoin. And I've been doing this since there was only Bitcoin. I just don't think NFTs being used in the way that they're used today are all that important. So I'm seeing a yellow light, and I'll shut up. But I will say that we are in a very important place right now in crypto. It feels like we have kind of always been in an important place. But this is like the most important bear market I've ever seen. Put it in. We'll leave it that way.
We're running short on time, but I want to ask one last one real quick from the four of you. What are you watching for next from a regulatory standpoint? Maybe Carlos, start with you.
I think in our area, more than, which this does at securities, more than regulation, we need enforcement, right? Because there's no incentive of treating things as securities if you can just bypass securities regulations and nothing happens. And that creates, the space doesn't grow, and if it doesn't grow, then there's no more adoption. So I would say that's one thing. And the second thing is that, many of the let's say cryptos or tokens out there that at some point that will be deemed to be securities, because they become so big, they also need to figure out a path of how they can become regulated, right? And that's what doesn't exist, this sort of crypto registration process of somebody that did an ICO and in the past and that now either needs to shut it down or needs to bring it into compliance. And that part is the only part in our industry where, there's no clear regulatory framework today for, like, let's say if XRP is deemed to be a security, what do they do with it? I mean, there's billions of dollars of value there, right? You can't just shut it down and destroy, because this will impact, the investors, right? So probably regulators don't also want to do that when something has become big enough, but at the same time, they need to give them a path to how do they bring things back into compliance.
Ari?
We haven't touched on the European Parliament. So there was just a vote where there was a brief scary moment where I think most in crypto were caught off guard that it was even happening, that European Parliament was voting in a bill whether to basically ban proof of work, which includes Bitcoin. And it would have been that financial institutions wouldn't be allowed to trade or transact or use cryptocurrencies that don't meet certain environmental standards. That was voted down. And even if it had been voted yes, it wouldn't have taken effect for many years and very possibly would have been overwritten or rewritten in the meantime. So it wasn't that scary of a vote. This is true, by the way, of a lot of regulation and new legislation proposed. Often the legislation takes effect after 5 years, and a lot can happen in 5 years. So like the Mnuchin Treasury stuff from a year and a half ago wasn't that scary for that reason, that the scariest parts would take effect in a while, and we were hoping that there's a bunch of US senators that are very openly pro-Bitcoin now, and they were saying they would get to work over the next year kind of fixing it. With all that said, I don't feel like I have a read on is that side a risk. Obviously, environmental concerns around Bitcoin have been, are raised and are popular. Could we see a bill like that actually pass and actually do something? I don't know. So that's something I'm going to be doing homework on over the next few months. But other than that, all the legislation is almost certainly going to be much slower moving. Any new regulation is almost certainly going to be much slower moving than enforcement of existing stuff. I'll be very surprised if the stuff that matters over the next 12 months is new. I think it's really going to be about enforcement of existing rules.
Jake?
I'm very excited about Web3. When I say Web3, I mean the stack of decentralization technologies, protocols, frameworks, and standards that enable people to create truly decentralized, end-to-end decentralized applications. We've now built up enough infrastructure in that stack that we can start to create decentralized social media, marketplaces for computation, digital services, self-sovereign data, self-sovereign identity, really transformative technologies, really transformative products that I'm excited to start to come to market. And what my hope is that as people see some of the really, really interesting use cases of this tech, beyond trading, beyond speculating, beyond Bored Apes, things like that, it will cause us to evaluate legislation, regulation. I hope that regulation ends up being minimal. I hope it ends up supporting innovation, and I hope it gives, I hope it's moderate and gives founders clarity.
Marco, final word?
Yeah, I'll make a general point and a specific point. Generally speaking, noble causes like environmental, social, and governance goods will be used to justify disastrous initiatives by federal and local governments over the next 2 years. It's going to be bad. Keep a lookout. The more specific point is around secondary market regulation. This is where most of the activity is happening on the Hill currently. We're seeing it already being pushed forward in MiCA in Europe, but here in the U.S., I expect we're going to see significant advances toward a more unified and consensus-built model of secondary market regulation for folks like us, like FTX and Coinbase, and all the rest. I think we'll be seeing new initiatives with more uniform support over that magic time frame, 12 to 18 months.
Got it. Well, thank you all. We'll leave it there.